Prospector News is media for educational purposes only and should not be construed as advice. We are not a certified financial analyst, licensed broker, or fund dealer, exempt market dealer, or hold a license to provide financial advice. We provide no legal opinion regarding accounting, tax, or law issues. Nothing in this podcast should be construed as investment advice or the solicitation to buy or sell stocks or commodities. All opinions expressed are those of the participants and should not be relied upon when making investment decisions. Those decisions should be made with the advice of a personal financial advisor. If you have enjoyed our podcast, please hit the like and share buttons and be sure to hit subscribe. This is Michael Fox of the Prospector News, and I am joined today by Chad Williams, the non-executive chairman of Honey Badger Silver. Welcome to the podcast, Chad.
Thank you very much, Michael. It's a pleasure and an honor to be here.
So for our listeners that aren't familiar with Honey Badger Silver, explain how the company is set up, because it's not your traditional silver company.
No, in fact, it's not a traditional mining company or royalty company. We're trying to do something different. In essence, the thesis that we have is that the silver price is going to go substantially higher. And to profit from that, our view is we're going to aggregate silver assets while no one's really paying attention. We have no competition right now, or at least we don't seem to have any competition. We'll be aggregating silver assets with the hope that those assets will be much, much more valuable at a later time. And there are three types of assets that we're looking for. One is streams and royalties. Number two is ounces in the ground, so established ounces in the ground. And number three is high grade, high quality silver exploration assets. So with that in mind, we like to think of ourselves as an active ETF. We're not an ETF. We're a publicly listed mining company. But the point is, we're aggregating assets to profit from a higher silver price, much like an ETF would.
I see. So when the market goes up, the value of the company goes up because the assets that you hold will increase in value as the market reflects that.
That's right. That's our thesis. And, I've been doing this for almost 30 years, and without exception, a higher commodity price drives higher asset prices. One would think that in the future, the laws of economics and physics and nature would be the same, and therefore a higher silver price, higher asset prices, and therefore higher stock value for Honey Badger.
Perfect. Now you're doing this by acquisition, and you've acquired numerous assets to date, including your most recent purchase that was announced just prior to the PDAC. Now, what you did was you bought the Cachinal project from Aftermath Silver, and that's located in Chile. Is that correct?
Yeah, that is correct. And in mining, there are only two ways of creating value. One is to find ounces through exploration. That is a risky endeavor, and the market isn't encouraging that kind of activity at the current time. The other is acquiring known assets cheaply and ounces, projects that will add to our net asset value per share immediately. We're looking at net asset value per share accretive transactions. Cachinal is a good example. It's almost 20 million ounces. It's known. It's in a safe jurisdiction. It's right next to a producing mine. We're paying just a little over $1 million for that, plus some stock. We think that's extremely value accretive for our shareholders.
Definitely, you're buying projects at cents on the dollar rather than full value.
Exactly.
It seems like the reverse strategy of the majors, where they're overpaying for projects at the height of the market. You're underpaying for them at the low end of the market.
That's exactly right. And when the silver price rises, silver asset values will be high, then our strategy will pivot. We'll add value through exploration. We already have those exploration assets. We've inventory, or will inventory them if you want to look at it that way, waiting for a higher silver price when the market's more conducive to paying for successful exploration. But for at the current time, like we bought, another example is Clear Lake. We bought this asset in the Yukon. Other companies have spent over $40 million on it. We paid $250,000. It comes with 5 million ounces of silver, so 5 cents an ounce, which we think is a very attractive price. Plus, it comes with 1.3 billion ounces of zinc, which we get for free. So I can't see in any way, shape, or form how that is not value accretive for our shareholders.
No, absolutely it is. And then you also have a third project in Ontario, correct?
Well, the current management and board took control of the company about 18 months ago, and we inherited some interesting silver projects in the Thunder Bay area. Now, Thunder Bay was mined for silver in the late 1800s, and there's a very notable silver mine called Silver Islet. And I would encourage your listeners to do some research. Very amazing story, but very high grades of silver, underexplored. And we have the dominant land position there. And yes, that is one of our silver assets. Again, some common themes, right? We didn't pay very much for those assets. High grade silver, low risk jurisdiction, very high value proposition for our shareholders.
Perfect. So as we move forward, you're looking for more projects to acquire under those guidelines.
Yeah, so we're outrageously busy right now, and we're looking at all kinds of things. We do feel that, I can't count, but let's say we've done 5 or 6 transactions since we started, which is a lot. Which should indicate to your listeners that we're very busy and we know what we're doing. And we do have a track record of doing this kind of thing before. And, we are looking at higher and higher quality assets as well. As I mentioned several times, we're not dealing with much competition. We still think the prices are quite low for quality silver assets. So look for us to make further announcements, hopefully, but certainly, you should be confident that we are going to be very, very active in terms of trying to add value for shareholders. Again, on a net asset value per share basis.
Yeah, I like to refer to that as the duck theory, where the duck is on the surface of the water and everything looks calm, but below the surface, there's an awful lot of stuff going on in the background that's making the duck move forward. And I think your company is kind of like that in a lot of ways.
That's exactly right. We're very busy and visiting sites and sending out term sheets and doing due diligence and things like that. It's also important to know that there are several deals that looked interesting. We agreed to terms with the vendors, but we decided not to acquire those assets based on subsequent due diligence, whether it was technical review or site visit, or similar, or legal issues, environmental issues, what have you. So, there is a cliche. Sometimes it's the deal that you don't do that makes your company successful, not the deal that you do.
Yeah, no doubt. There's nothing worse than getting hung with a bad deal around your neck that you can't escape from and you wasted money on.
That's right.
So that's right. Good money after bad.
Mm-hmm.
Well, we look forward to the next round of acquisitions and then watching this company grow further. Thanks very much for your time today.
Thank you very much. We'll talk to you soon.
Honey Badger Silver is a paid sponsor of the Prospector News. The host has shares and warrants of Honey Badger Silver purchased at the market for investment purposes.